Hey everyone, welcome back to Corporate Decoder, the place where we make sense of all that corporate jargon. Today we're diving into a proxy statement from Affiliated Managers Group, also known as AMG. And let me tell you, this proxy statement is so exciting, you'll be on the edge of your seat. Okay, maybe not, but we're going to break it down so you know what's going on behind the scenes. So what is this proxy statement about? It's essentially a document that AMG sends out to its shareholders before their annual meeting. It tells them about the issues they'll be voting on, from electing directors to approving executive pay. Let's get started. First, a quick summary. The main items for the shareholders to vote on are pretty standard. Electing 8 directors, giving an advisory vote on how much the top executives are paid, and ratifying the selection of their accounting firm. The board recommends voting yes on all of these. One thing that really jumps out is their financial performance. Economic earnings per share, or EPS, grew by 10%. Think of it as the real profit they're making per share after some accounting adjustments. Adjusted EBITDA, which is like their operating profit, also grew by 4%. Basically, they're making more money even though performance fees were down. They've also been buying back a lot of their own stock, reducing the number of shares outstanding by about 36% since 2019. Fewer shares mean each share is worth more. The company can buy back stocks when they have excess cash. Now let's look at the people in charge, the board of directors. They emphasize that they have a highly independent and skilled board. All the important committees are made up entirely of independent directors, meaning they aren't employees of the company. More than 40% of independent director nominees are women or ethnic minorities. They want a diverse board. AMG also highlights that they actively engage with shareholders, getting their feedback on things like corporate governance and executive compensation. To make sure the executives' interests are aligned with the shareholders, AMG has equity ownership guidelines. The CEO needs to own stock worth 10 times their salary, and other executives need to own 7 times their salary. This encourages them to think like owners. Let's talk about executive pay. In the previous year, almost everyone voted to approve the executive compensation, so shareholders seem happy with the way things are going. The company has streamlined their incentive plan over the past years. In response to shareholder and proxy advisor feedback, the company made changes to its incentive determination process. For example, they replaced a metric called annual management fee EBITDA with annual adjusted EBITDA. It did not have a material impact on the overall achievement score. They reduced the number of metrics from 10 to 9, but this resulted in a greater reliance on those financial targets. The company has a pretty complex way of determining how much the executives get paid. They use a scorecard with 9 different metrics, all quantitative. Then, depending on how well they do, the executives get a certain payout. The CEO's target total payout was set at the median of the peer group compensation, meaning they want to pay their CEO about the same as CEOs at similar companies. So why these metrics? According to the proxy, they chose them because they are key drivers of shareholder return and the company's strategic goals. The company removed a company called Ares Management from their peer group this year. This resulted in a 13% decrease in the median CEO compensation of the peer group. They are also incentivizing long-term business strategy. The company increased proportion of long-term performance achievement awards, performance-based equity, as a percentage of total equity incentive awards to 75% from 60%. So now it is even more aligned with the business. Moving on to proposal 1, electing directors. There are 8 nominees for the board, and the board recommends voting for all of them. The directors bring a lot of experience to the table, including capital allocation, investment management, and leadership. A director needs to get more for votes than against votes to get elected. The shareholders have a right to vote. The board met 6 times in the past year, and each director attended almost all of the meetings. The board also has several committees, like the audit committee directors. The nominating and governance committee looks for candidates with things like business experience, knowledge of the financial services industry, and an understanding of finance. The company makes sure the directors are doing a good job by doing annual self-assessments. The company has an independent board chair, someone who isn't the CEO. This person is responsible for leading the board, making sure information flows well, and evaluating the CEO. The company manages risk by having the CEO, CFO, and other executives identify and manage risks. The board of directors oversees this process. The company emphasizes that it focuses on sustainability. The substantial majority of AMG shares supporting the company's core value of ownership mindset. The company takes cybersecurity seriously and has a formal information security program to protect data. The audit committee makes sure there aren't any conflicts of interest, and they review any transactions where a director or executive has a personal interest. Finally, the company discloses information about their equity compensation plans, which is how they give stock and options to employees. And now for my take. AMG seems to be in a solid position. Their earnings are growing, they're buying back stock, and they've got a diverse and engaged board. There isn't anything raising obvious red flags. The company can be stronger if the shareholder returns are stronger. They seem to have responded to what the shareholder want, so I think AMG is on a good path. Of course, this is just my analysis, so do your own research and make your own decisions. Thanks for watching. If you found this helpful, please like, comment and subscribe for more corporate deep dives.